So what I'm going to walk you through tonight is why tokenization is the biggest financial transformation of our lifetime, how Trusted Smart Chain is positioned to lead in this space, and how you can actually participate in the infrastructure by supporting the Trusted Smart Chain network. If you understand this, you're going to see why people are comparing this to being on the ground floor of Bitcoin back in 2009. And back then, very few people understood it. But those who did, they were part of history in the making. That's the kind of window that we're looking at right now. An opportunity to own a piece of the foundation before the rest of the world catches on. So with that, once again, I want to welcome you to the Trusted Smart Chain overview. With that, let's go ahead and get started. First and foremost, disclaimer. I am an owner of ProsperLink. ProsperLink holds the exclusive contract with the governing DAO for Trusted Smart Chain. Let's unpack that a little bit. So what is a DAO? A DAO is a legal entity that is recognized by the government, no different than an LLC or a sub-S corporation, except that it's run by its members. It is fully decentralized. That means that no one owns Trusted Smart Chain. The information that I'm sharing tonight is solely for education and information purposes only. We're going to be talking about trust nodes, which are software licenses that support the operations of the Trusted Smart Chain blockchain. Nodes are not investments. We don't make any guarantees of income, profits, or financial returns of any kind. And I am not a financial advisor. We always encourage you to do your own homework, do your own research so that you can make a well-informed decision. So let's talk a little bit about why we created Trusted Smart Chain. The idea was to bridge the gap between high-valued assets and tokenization. We wanted to provide a secure, scalable, and a universally accepted framework for tokenizing real-world assets. The idea was to solve challenges as it pertains to trust, regulation, and utility within the blockchain space. Now, before we talk about where we're going, I think it's important to acknowledge where cryptocurrency has been. Let's go back to 2008 where it all started. Some of you might remember what was going on during that time. There was this global financial crisis that was caused by irresponsible banking and lending systems. There was a lack of trust in centralized institutions. In 2009, an anonymous entity known only as Satoshi Nakamoto came along and introduced Bitcoin as the first decentralized currency. The idea was to allow a peer-to-peer transaction without the government or the banks in the middle of that transaction. Now, although Bitcoin was first, the key innovation was blockchain technology. Blockchain is a digital ledger that records transactions across a decentralized network of computers. We're going to also refer to those tonight as nodes. The idea was to let people trade or share directly with each other instead of going through a middleman like the bank. That was the whole idea of decentralization, to put the power back into the people's hands. Now, along the way, there's been significant milestones, paradigm shifts within the industry. Some of them have led to entire new industries. For example, in 2015, a coin by the name of Ethereum was introduced. And this was significant because along with Ethereum, smart contracts were introduced. Smart contracts are self-executing contracts where terms can be written directly into the code. Now, in 2015 to 2017, we started to see entire new industries like decentralized apps, decentralized finance, non-fungible tokens. And of course, 2017, we started to see all of the meme coins coming out. So the question that we have to ask ourselves is what's coming next? And the answer to that question is tokenization of real-world assets. This is a massive shift in the entire financial system. Larry Fink, the head of BlackRock, just the other day, you can go Google this, said that tokenization of real-world assets is like a freight train that cannot be stopped. So what tokenization is it's using that same blockchain technology, the infrastructure, to break down physical or digital assets into smaller tradable units, which now makes ownership more accessible, more secure, and more transparent. So we're seeing everything from luxury hotels, even artwork, existing businesses, commercial property, REITs, residential homes even, commodities, and so much more that are now being tokenized. Another word for tokenized could be fractionalized. Think in the terms of When you go buy stock, you buy a certificate of stock that gives you a right of distribution or a right of ownership in a company, except this isn't the stock market. What's happening is these high valued assets are now moving on a blockchain, and the average everyday person who may not be able to go buy a luxury hotel can now go buy tokens that are digital representations of ownership of that high valued asset or that luxury hotel. Now, to give you some perspective of the growth, if we go back to 2021, about $2.6 billion in assets were tokenized. This year, $500 billion in assets will move on chain. It's projected that by the year 2030, conservative estimates suggest that we could hit anywhere from 16 trillion upwards to $100 trillion in real world assets. So the question that we have to ask ourselves is why? Why all of a sudden are we seeing these high valued assets, these businesses moving on chain? The answer to that question is that it's much more streamlined, it's much more cost effective, and it's less risky for these businesses to raise capital utilizing blockchain than some of the alternative methods that they've used in the past. So I'll give you an example. If you wanted to raise capital, you could go to private equity, but private equity wants you to give up something that nobody wants to release, which is control. You could take your company public, but the cost to capital now is on average $5 million to take a company public. It's a lengthy process. And let's say that you make it through that process and you make it to the stock market. Congratulations, because your dollar turns into 80 cents overnight. Why? Because you're dealing with massive manipulation. Up to 80% of the shares that are now sold in the stock market are sold through dark pools and naked shorting. If you want to do a little research here and educate yourself in this area, there's a great movie out there called Dumb Money that talks about the GameStop story. Some of you might remember hearing about that in the media. And it shows how these institutions are able to manipulate these stocks in their favor. Now, you're also up against companies like Hindenburg and BlackRock that are trying to short your stock. You've also got bots now that are manipulating the stocks. And so if you're a small cap company, let's say that you're a $50 to $100 million company and you want to go raise capital, that's a pretty risky proposition going public. So what they have figured out is by utilizing blockchain, first of all, blockchain is fully transparent. It also negates those risks, and it opens up a global market of investors that they would have never been exposed to before. And on the flip side of the coin, guys, this is great for the retail investors, the average everyday person, you and I. Why? Because we now have a seat at the table. Because when a company goes public, they typically do what's called a private offering. That private offering is aimed at accredited investors. Well, that eliminates 98, 99% of the population. But through tokenization of real world assets, now, if you have access to the internet, it doesn't matter where you are in the world, you can now invest and participate in the capital raise of these high valued assets. But there are some challenges in the world of cryptocurrency. We're in this really interesting stage. It's fascinating to me because cryptocurrency's only been around for 16 years. When we talk about currency, most currencies have been around for hundreds of years. So if you think about the level of adoption that we've seen in the world of cryptocurrency in just 16 years, it's fascinating. But we've still got some work to do. First of all, there are some regulatory uncertainties that exist. The government has failed to provide clarity, framework, regulation, investor protection, and that's kept the average everyday person at bay. It's kept them from wanting to get involved. They would say that it's too speculative. Well, let me tell you something. What's happening right now is cryptocurrency is growing up. Although we don't necessarily have all of the clarity yet, we now have an administration that is committed to providing that framework, and it's coming almost on a weekly and monthly basis. We're seeing all kinds of new things that are introduced, but it hasn't always been that way. Now, let's talk a little bit about why that is. So when you withdraw, let's say $1,000 out of the traditional bank and you go buy Bitcoin, who loses? The banks do. The banks do, and here's why. Because when you go deposit money with the bank, we operate on what's called the fractional banking reserve system. That gives them the power and the ability to be able to take your money and to go and invest it. And they go and invest it and they make fortunes, often at your expense. And I say that because the value of the dollar over the last 5 years has gone down 25%. The value of the dollar this year, 2025, has gone down 10%. That means that if you are not making 10% on your money, you are losing money right now. Do you know that the average everyday person has to earn an extra $14,500 in 2025 just to live the same quality of life that you lived 3 years ago? But the banks have your money and they're investing it and they're making a fortune. So here's what people don't realize. We talk about cryptocurrency, digital currency. It's coming, it's coming. Let me let you in on a little secret. It's not just coming, it's arrived. Do you realize that 20% of the US population now owns cryptocurrency? That's trillions of dollars that have exited the traditional banking system. Guys, the banks are in trouble. Do you guys realize before COVID, they at least had to have 10% of the funds that are deposited within their institution, they had to have at least 10% backing it up. Today, they don't even have to have that anymore. Do you realize that in the last 6 years, more banks have closed during that 6 year period than all of the previous years combined? So what's happening is the banks started to see this money that was exiting the traditional banking system, and they looked at it as a threat. See, when Bitcoin was first introduced, nobody even understood it. Nobody knew what to think of it. But then it started to gain some momentum, and the banks started going, wait a second, this is a real problem. So how did the banks respond? Well, they launched a massive, massive FUD campaign. You know what FUD is? Fear, uncertainty, and doubt. They went out there publicly, the heads of all of these banks, Warren Buffett, Jamie Dimon over at JP Morgan Chase, and they told you that it was a Ponzi scheme. They told you that it was a bubble, that it was going to be worse than the dot-com bubble. They told you that it was trash. Warren Buffett called it rat poison. Even 3 years ago, Jamie Dimon, head of JP Morgan Chase, doubled down, said, guys, this is a decentralized Ponzi scheme. Stay away from it. But let me ask you a question. While they were telling you to stay away from it, what do you think that they were doing with your money? They were buying Bitcoin. They were building the rails and the infrastructure so that they could figure out how to monetize it. They just weren't there yet. And the government, well, the government loves control, and they didn't have control, and they had the banks coming to them, lobbying them, saying, listen, we gotta slow this down. This is a major threat to the entire banking system that our government relies on. So what did the government do? Well, the government declared war against cryptocurrency. In 2020, you guys might remember, 2021, there was an exchange by the name of FTX that went under. And this guy named Sam Friedman went to jail. Well, that gave the government all of the ammunition that they needed. And they started firing off lawsuit after lawsuit after lawsuit against just about any prominent cryptocurrency company here in the United States. They went after Coinbase, who had previously gotten permission to be able to do business here. They went after Binance. They went after XRP and all kinds of other prominent companies. And here was the claim. The claim was Bitcoin is not considered a security, but everything else, we're considering it to be a security based on the Howey test, which was a lawsuit that was back in 1940 that was focused around orange groves, and they're applying that to digital currency today to declare that all of these things must be a security. Well, if you're a security, that means that you have to go register as an investment with the Security Exchange Commission. Here was the problem. Anybody that tried to register with the SEC, if the word crypto was on the application, denied. They wouldn't give them a pathway forward. So what did this do? It pushed everybody into a gray area. They had to guess their way forward. Well, now the SEC, it was like shooting fish in a barrel, because now they could go after anybody and everybody that they wanted to. See, they wanted the ambiguity. They didn't want to define it because they wanted to be able to rule by enforcement. I have a personal story that I'm going to share with you tonight because it's relevant to why Trusted Smart Chain exists today. So I have been involved in cryptocurrency since 2016. I started supporting the Ethereum network, operating nodes back during that period of time. And I've always believed that operating nodes is a more sophisticated way to get involved in cryptocurrency. And the reason that I say that is would you rather go to the grocery store and buy a dozen eggs, or would you rather own the chicken that lays the eggs every single day? I'd rather own the chicken. I like nodes because they are minting the tokens that go into circulation every single day. So around 2020, I started to notice a shift. See, in all disruptive technology, if you study disruptive technology, it goes through different stages. The first stage, nobody really pays attention to it, or they doubt it. Automobile came along. What did they say? Horses are much more reliable than this. What happened when the telephone came out? What happened when the cell phone came out? Same thing over and over again. But then here's the thing. All of a sudden, you start to get this massive opposition when it becomes a threat, and then it hits something called the pinnacle of hype. In cryptocurrency, this was around 2017, 2018, where we had all kinds of initial coin offerings, meme coins, pump and dumps, rug pulls, no regulation. It was the wild, wild west. In 2018, everything came crashing down. But then something interesting happened around 2020. We entered into a new era, and it's called the slope of enlightenment. And that's where the builders kept building, the innovators kept innovating, and somebody introduced this concept of tokenizing real world assets. I've often asked myself, what's it going to take to move from a place to mass adoption? And I've always thought we've got to move away from hype and speculation. We've got to get to a place of tangibility and substance. The analogy I would give you is pre-1972, the dollar used to be backed by gold. Richard Nixon removed the gold standard, and what's happened to the value of the dollar since that time? Just gone down and down and down. So someone introduces this idea of tokens, cryptocurrency that's backed by high-valued assets. Well, there was an early pioneer that was launching some projects, and I got involved in operating nodes on this particular project. It started to do very well, and I was brought in as a consultant to now develop the marketing arm for this particular company. Well, about this time, that's when lawsuits started going out. And they filed a lawsuit against this company. Now, I wasn't an owner in the company, but I was also sued because I was selling an unregistered security. Now, I can tell you that when the US government decides to file a lawsuit against you, it's not a lot of fun. It's actually really scary. I drove home from school one day, dropped my kids off at school, and pulled into my driveway. And a guy from my church that I knew well came up to me, walks up to me in my driveway, and he says, "Brother Flaherty, I'm sorry to do this to you, but you're being sued by the SEC." And he hands me not one, but two of these. Now, at this point in time, by the way, this was a civil lawsuit. We had some choices to make. One choice was we could try to go down the path of settling with the SEC and paying fines. That would have always been on our record. The second option was is we could fight. I'm a big believer that if you're passionate about something and you really believe in something, some things are just worth fighting for. So I can tell you that we chose to fight the US government. And when you choose to fight the US government, they don't fight fair. They come at you in three different ways. First of all, financially, and they try to lock up all of your assets. The second thing that they do is they come at you publicly. And they actually have a press release team ready to go. And they go out and they say all kinds of terrible things about you that aren't even remotely close to being true just to discredit you. The third thing that they do is they try to wrap you up in court. We spent the better part of a year and millions of dollars in attorney's fees, and we won our case. Not only did we win our case, a federal judge threw the case out, held the SEC in contempt of court, and fined them millions of dollars. Not only did they get fined millions of dollars, the attorneys that brought the case forward against us were actually terminated from the SEC. And not only that, they actually closed down the regional office that brought the case forward against us. Now, why do I share this story with you? Because I believe that sometimes you go through challenges in life to push you down a different path to exactly where you're supposed to be. We looked at that and we said, what can we learn from this experience? And I can tell you that, listening to the government's concerns and evaluating even the previous company that we were a part of and saying, what could we do to ensure that we provide accountability to the real world assets, but investor protection on the other side? And what we came up with was a universally accepted framework for tokenizing real world assets. So how do we do that? What we're doing is we focus on real existing businesses with cash flowing assets. We're not interested in speculative or unproven projects. So on our blockchain, you're not going to find the Hawk Tua token or the Kanye West latest rug pull, because we're only working with existing businesses that are cash flowing with assets. Now, here's the differentiator. We require every real world asset to file a proper registration with the Security Exchange Commission and register as an investment. If it walks like a duck and quacks like a duck, then it's a duck. We're treating it like a security. Why is that important? Because now what this does is it forces independent audits up front and annually thereafter to ensure that all of the tokenized assets are properly valued, properly tracked, and properly secure. This platform, Trusted Smart Chain, fosters trust with transparent reporting on asset value and ownership and transaction history. Now, you might say, well, how are you different? How are you different than some of the other blockchains that are out there? There are other blockchains that are already tokenizing real world assets. There's Ethereum, there's Solana. So, what really separates you from everybody else? I'm going to play a 70-second video for you that helps you to understand our unique position in the marketplace.
People often ask me, how is Trusted Smart Chain different than any other blockchain that's out there? You know, I was recently having a conversation with ChatGPT and I asked the question, how many blockchains are out there today? And it said over 1,000. And I said, okay, how many are true layer one blockchains? We're not talking about, you know, an extension of Litecoin or some type of a white labeled blockchain. And it came back and said 130. And then I asked, well, out of those 130, how many are fully operable? That means that their node network is active, their validators are online, they have the ability to be able to host a smart contract. And it said 30. And I thought, man, we are one of 30 layer one blockchains, which is pretty exciting. Then I asked the question, how many of those focus exclusively on real world assets? And it said 10. And then I asked the most important question, how many of those blockchains require every real world asset to file a registration A, register as an investment with the Security Exchange Commission, have independent audits up front, and annually thereafter? And it said 1, Trusted Smart Chain. You want to know how we're different? We're raising the bar in this industry.
The government just granted $16 trillion in real world assets the ability to now be able to tokenize, to utilize blockchain to raise capital. You know what they're looking for? They're looking for someone that can help them with a regulatory and compliant pathway forward. Hello, we are leading the way. And at the same time, by providing accountability to the real world asset, it provides investor protection to the investors that are participating in the capital raise of these real world assets. Guys, to our knowledge, we are first in the entire world to implement these standards. Now, let's talk a little bit about our vision for growth for a moment. It's important you understand this is not a capital raise. We're not raising capital. Our blockchain is already built. The node network is active. Our validators are online. We are distributing Trusted Smart Chain token to all of our node operators that are supporting the network. Our blockchain explorer is live, and our token was just listed. So we're not raising capital. And I say that because there's a lot of blockchain projects that are out there that launch a token or launch a node project to raise capital. And then you know what? They talk about what they're going to do. We already have a blockchain that has the capability of being able to support smart contracts. In fact, we have 12 real world assets that are in process. We have dozens more that we are in discussions with right now. These are ranging across diverse sectors: real estate, medical grade hemp facility, commodities, oil and gas, just to name a few. The average valuation of the real world assets that are coming onto the Trusted Smart Chain is approximately $50 million. That's our sweet spot. We've also introduced the Trusted Society, which is an exclusive blockchain community that is built around education. Remember, nobody owns Trusted Smart Chain, so it's very critical that our node operators have a very strong understanding of not only how blockchain works, but what's happening within the Trusted Smart Chain, because by vote, they determine the direction of the Trusted Smart Chain. Now let's talk a little bit about our vision for growth and some of the milestones that we've accomplished. We had the genesis of our node network on March 29th. If you're a node operator that is here with us tonight, from the moment that you activated your node and you connected to the Trusted Smart Chain network, have you received a daily deposit of Trusted Smart Chain token every single day since the day that you were active? We activated our first 5,000 nodes back in March. Now we have a total of almost 27,000 active nodes around the world supporting the Trusted Smart Chain node network. You can see here our node operators that are already earning those daily digital rewards for their support and their participation. I mentioned just earlier that we just had our token listing a few weeks ago. You can go onto our Explorer. You can see what that current price is of the Trusted Smart Chain token. We also launched a belief building initiative. This was very important because a lot of cryptocurrency projects, they lack transparency. You don't know who's behind the projects. A lot of times they use language that, it's ambiguous at best. They go out there and they say, well, this is backed by billions of dollars in businesses. This is backed by gold mines. But here's the problem. There's nothing that is there that pegs the physical asset to the digital asset. And that is the problem. And it leaves a lot of room for error. So what we've done is we ensure that we have events every 90 days. In fact, we've had 9 events this year, so even more than that, either at our beautiful offices in Irvine, California, or our newly opened office that we just opened this weekend in Tampa, Florida. We have an East Coast and a West Coast office now. And the opportunity for the node operators is to be able to come and learn about the Trusted Smart Chain, to get updates on the ecosystem, and to meet the real world asset managers. Listen to why they're tokenizing and why they chose Trusted Smart Chain. Now, this is not a solicitation. These are registered investments. We don't get involved in the solicitation, but it's important that our node operators are included so that they, again, can make well-informed decisions as stakeholders here at Trusted Smart Chain. The goal is 100 real-world assets over the next 3 years. Now, I can tell you, there is no shortage of real-world assets that are currently coming to the table. There's no shortage of businesses that are looking for money, and there's never going to be a shortage of businesses that are looking for capital. They come to us a number of different ways. Either A, they come to us through our trusted advisors. So we actually have an advisory board over on the T7X side. And what they do, individuals like Andrew Scott, who has been in finance for 30 years, started off at Bear Stearns, ended up number 2 over at Think Equity, done well over 100 publicly traded companies to raise billions of dollars of cash. And he spoke at our last event in Irvine, and he talked about how his network is no longer talking about going public. They're all talking about tokenizing. So we've got advisors that bring people to the Trusted Smart Chain. We also have a community. That's the power of the community. As the community grows, our stakeholders, our node operators, many of them are business owners or no business owners or real estate projects that are looking to raise capital. So right now, we're just choosing from the low-hanging fruit. We're only going to do 10 to 12 the first year, 20 to 30 the second year, 100 by year 3. That's our goal, but we're not going to stop there. And keep in mind that that scaling is also congruent with the amount of token that is going into circulation. So as we get into the tokenomics tonight, you'll understand a little bit more about why we're taking that approach. We've also introduced our own decentralized wallet. Why is this important? It is important that our node operators have the ability to be able to protect and manage their digital assets efficiently. This is a non-custodial wallet, which means they are the only ones that have access to those digital rewards, which is crucial. I'm also very excited to announce that our blockchain explorer is alive. If you go to explorer.trustedsmartchain.com, you can see every transaction and record in real time right on the public ledger. Bitcoin has BSC scan. Ethereum has Etherscan. Trusted Smart Chain has the Explorer, trustedsmartchain.com, our blockchain explorer that is the heartbeat of the blockchain. See, the beautiful thing is you don't have to take my word for it. You can go to our Explorer and you can see the blocks that are being written in real time. You can also see the current price that Trusted Smart Chain is trading for, all right there on our Explorer. Now, we've talked about our meaningful purpose in the marketplace. We've talked about this exclusive community that we're building, and we're going to get into that a little bit later because that is one of the unique components to what we've created here. But I want to talk a little bit about utility for a moment. Utility is real world case use. Some utility tokens that I'll give you some examples. How about Ethereum or XRP or Solana or Bitcoin or BNB? These are all some of your top projects that are out there from a market cap standpoint, from a popularity standpoint. Why? Because they have actual real world case use. They're not being driven by hype or some celebrity influencer that's out there talking about how the price is going to go to the moon and you got to jump in now. They have real substance. So we're going to talk a little bit about how the Trusted Smart Chain token is being utilized to help facilitate these real world assets. Let's talk about our grant. So we actually formed a grant where we take 25% of all of our node sales and we put it into a grant. When all is said and done, we are selling 200,000 nodes to support the trusted smart chain blockchain. When they are gone, they're gone. That means that hundreds of millions of dollars will be put into a grant. That grant goes to support technology companies that are tokenizing real world assets, blockchain projects, different cryptocurrency companies. Anyone can apply for the grant. And here's the great thing. Guess who decides whether or not they get approved? The node operators by vote. You see, we're not making the decisions. What happens in a traditional corporation or in businesses? You've got a handful of people that are making the decisions for the betterment of who? The people that own the majority of the stock, the owners in the company. In a decentralized system, it's by the people for the people. So I want to talk to you about one of our grant recipients. They're called T7X. Now, T7X is a licensed digital asset platform. Another word would be an exchange, except here in the United States, fun fact, we actually don't have an exchange license in the USA. So you know them as Coinbase or Crypto.com or Kraken or Binance. These are places that people go, they open up an account so that they can buy and sell cryptocurrency. So T7X is a licensed digital asset trading platform, but what makes them so unique is they're only listing tokens that are registered investments. This is brilliant. They're fully compliant 7 continents. Now, let me tell you why this is so brilliant. The reason it's brilliant is because there's this new demographic of people that are coming into cryptocurrency right now. And this demographic is different than the people that were here the last 10 to 15 years. See, the previous demographic, we call them the crypto bros, right? These were the people that were here. Didn't mind, getting involved with speculative meme coins. They were basically gambling. Some, hats on sideways, got lucky with a meme coin, driving a green Lamborghini. Now, I got nothing against supercars, by the way, but here's what's happening now. Now you have smart money and institutional money that's coming into the industry. And smart money wants something different. The first thing they want is they don't want to go play in the meme coin game. Guys, meme coins are fading out. Speculative coins are fading out. What they want is they want to go buy tokens that are digital representations of a high valued asset. They want tokens that are backed by something real. Second thing they want investments, registered investments. Why? Because they know that if it's registered, they're being held accountable to an entirely different standard. And they can also now go evaluate these companies. They can look at the registration, 100-page document that looks at you can look at the P&L, you can look at the asset statement, and you can make a well-informed decision. Here's a third thing they want. They want distributions. They want dividends. If they're going to invest in a company that's raising capital, they want 10% on their money, at least 10% to beat inflation right now. So here's what T7X did. T7X says we're going to build a platform that caters not to the institutions, but to the retail investors, the smart money that's now coming into this industry. The analogy I would give you is some of you have accounts with Robinhood. Robinhood, 10, 15 years ago, came along and they built a platform. And they were the first to remove barriers, allow you to be able to manage your own portfolio, but they gave you access to fractionalized shares of stock. Robinhood's worth billions of dollars today. Well, T7X hired the exact same development team that built Robinhood. And they're doing the exact same thing Robinhood did. The only difference is they're giving access to fractionalized shares of high-valued assets. That's it. So this is a beautiful business model. So why would Trusted Smart Chain donate millions of dollars to T7X? Because they've chosen Trusted Smart Chain as their infrastructure to support all of their real-world asset projects. They've also chosen the Trusted Smart Chain token to facilitate all of these real-world assets. So what do I mean by that? Binance is one of the largest exchanges in the world. Binance also has a blockchain that has hundreds, if not thousands, of cryptocurrency projects, coins that are built on their blockchain. Well, if you want access to Binance or any of the projects that are built on their ecosystem, you have to have BNB in your wallet. BNB is the native token to Binance. So BNB is essentially the key that gets you in the door because every transaction, you have to have BNB in your wallet to pay what's called the gas fees. These are transaction fees for their entire ecosystem. Do you guys realize that BNB just became the third largest market cap coin in the entire world, just hit a new all-time high about 5 weeks ago, hitting about $1,250 a token. Why? Because there's real world utility. A utility token often gives you access. In the exact same way, T7X has chosen the Trusted Smart Chain token as their preferred token of choice, as their key. And every single real world asset that is built on or listed on T7X is utilizing the Trusted Smart Chain token. So what we're talking about is real world case use. Demand. Now let's go through how it all works. So you have T7X, right? You have real world assets that are tokenized into digital representations that live on the Trusted Smart Chain. So you have T7X. This is where people go to buy and sell, in this case, registered investments, things like the Tulum coin. Some of you, if you've been down to Tulum and you actually had a chance to go meet the billionaire that owns the Tulum hotels that are tokenizing on our blockchain, drop an I in the comment section below. Medical grade hemp facility, if you've had a chance to be able to listen to Nick that owns the medical grade hemp facilities across the United States and Canada, drop an I in the comment section below. White Claw Crude Oil and Gas Company. These are all projects that are currently in process of tokenizing on the Trusted Smart Chain. They're going to be listed on T7X. But what you need to understand is they're powered by Trusted Smart Chain. Every single cryptocurrency token has to have a blockchain to live on. Remember, we've removed the banks. The blockchain has replaced the banks. So every token has to have a blockchain to live on. So what is a blockchain again? It's nothing more than a network of nodes. A blockchain is secured by a network of decentralized nodes. Think of it as blockchain's version of cell towers. They work together to validate transactions and maintain the network, creating a secure and resilient system. So when a transaction is created, it's sent out to all of the nodes. And the nodes have to work through consensus to be able to validate those transactions. So here's the beautiful thing. The beautiful thing is, if we now have removed those nodes, if we've removed those banks, excuse me, well then where do the fees go? Remember, with banks, there's all kinds of fees. But in a decentralized system, where do those fees go? They go to the node operators. That's the beautiful part about decentralization. The banks are no longer in place. Remember, we talked about decentralization being about the people. That's what I've always loved about blockchain, by the people, for the people. Well, in this case, the average person has an opportunity to be able to operate a node, and for their support of the Trusted Smart Chain and for their participation within the community, including votes and helping to direct and guide the Trusted Smart Chain, they earn Trusted Smart Chain token every single day. I'm fond of the saying that gold is God's money, fiat currency is the government's money, cryptocurrency is the people's money. This gives our node operators an opportunity to be able to participate. Now, you might be asking, what can I do with those tokens that I'm earning every single day? That's a great question. There's no lockup period. You are in full control. You have total custody of those tokens. So you can sell them every day if you want to. You can go over to our Explorer right now and see what the price of Trusted Smart Chain token is trading for. Or you could swap them for some of your other favorite projects, Bitcoin or XRP or Solana or Ethereum, or you could hold on to them. Now, why would you want to hold on to them? That's a good question. Let's talk a little bit more about that. But first, let's talk about the utility and the demand. I want to ask everybody a question here. I want you to think about this. Why is Bitcoin trading at $103,000 a coin today? It's down a little bit from its all-time high about 2 months ago. But why is it trading at 103? It was less than a penny 16 years ago. It's worth over $100,000. One word, demand. The greatest benefactor of demand is value. It doesn't matter what asset it is, what asset class that it is. We could be talking about classic automobiles. We could be talking about real estate. So let's talk about the demand for the Trusted Smart Chain token. So the real world assets that are being listed over at T7X, these are registered investments. So they'll go file a Reg A, they'll register, they'll submit it to the SEC. When they get approved, they now start their capital raise. They have 12 months to raise capital. Now, once again, we don't get involved in that process. The real world asset manager will partner with a media company. They'll go out and solicit both accredited and non-accredited investors. And guess what? People will come and participate. Why? Because they're paying on average a 10% distribution. But here's where it gets exciting. We require those real world assets to pay their investors with the Trusted Smart Chain token. So that means the real world asset manager has to take his fiat currency, go to a trading platform, and buy Trusted Smart Chain token. And then he's got to pay, or she's got to pay their investors with TSC. But here's the most important question. When they go to buy those tokens, who are they really buying them from? Joanna's smiling because she's a node operator and she knows that they got to buy them from her. They got to buy them from Dean. They got to buy them from Craig. They got to buy them from Douglas. And that makes them happy because they get to decide when they want to sell and at what price they want to sell. It's no different than if you were fortunate enough to be supporting the Bitcoin blockchain and the Bitcoin network when Bitcoin first came out. Guys, Bitcoin was worth less than a penny. Then it went to $1, then it went to $10, then it went to $100, and you could have sold at any point in time that you wanted to, or you could have held on to it. And as the demand grew, what happened to the value of Bitcoin? It hit 10,000, 50,000, 75,000, 100,000, 125,000 2 months ago. And you get to decide when you want to sell, but what drove that price is demand. We also require the real world assets to take 2.5 to 10% of their capital raise and set it aside, and they have to go buy Trusted Smart Chain with it and stake it for 5 years. They can't touch it. Now, what does that do to the circulating supply? It creates a diminishing supply. So now you've got a growing demand and a diminishing supply. What happens in the real estate market when there's 500 homes on the market? You've got all kinds of people moving in, and then BlackRock comes in and buys 250 of them up. What happens to the other 250 that are still on the market? They become more scarce. What typically happens to the value of those homes? What we have created here, we've already talked about the gas fees on T7X, is real world utility. Now, I want to talk for a moment about the tokenomics because there's this formula. Some people refer to it as the magic formula of Bitcoin. I don't think it's magic at all. It's not magic, it's just math. See, Bitcoin did a couple of things really well. The formula, by the way, is utility, supply, and demand. Utility, supply, and demand. So Bitcoin said at the very beginning, when it was introduced, that there's only going to be 21 million Bitcoin. That's it. When they're gone, they're gone. It was programmed into a smart contract. It can never be changed. So that fixed supply, in Bitcoin's case, created a unique store of value and an appreciating asset. Here's the second thing they did. They said, we're going to have a halving event every 4 years. So the first 4 years, we're going to start off distributing 7,191 tokens a day. But after 4 years, we're going to cut it in half. And then after 4 more years, we're going to cut it in half again. And we're just going to keep doing that every 4 years. Well, can anybody tell me what's happened to the value of Bitcoin after every single halving event, historically speaking? It's hit a new all-time high every single time. Do you realize today that there's only 400 Bitcoin that are being minted every day? Institutions are buying 2 to 3 times that every day right now. You've got all this capital in the world, but there's only 21 million Bitcoin and 95% of them are already minted. So we looked at the tokenomics of a lot of these different projects, a lot of these different cryptocurrency coins, and we said, you know what? Why would you outmaster the master? We're going to do the same thing that Bitcoin did. So Trusted Smart Chain only has 21 million tokens that will ever be minted. 10.5 million go out in the first 4 years, same as Bitcoin. See, you can go buy a Bitcoin miner today for $9,000, $10,000. They'll ship it to your house. You can activate it. It's expensive to run, noisy, hot, very outdated, but you can do it. But here's the problem. You can't go back to 2009 to 2013 when the distribution was at its highest. That's the problem. That's this time right now for Trusted Smart Chain. That means that 2.6 million tokens every year for the first 4 years are going to be distributed to who? Our node operators. That's 7,191 tokens a day that go out to all of our active node operators. Now, there's only 26, 27,000 nodes that are active online right now in comparison to millions on the Bitcoin node network. So does timing matter? You bet it does. Because when there's less people online and the distribution is at its highest, I refer to that as an accumulation phase. How many of you, knowing what you know today about Bitcoin, if you could go back to 2009 during their accumulation phase, would have done everything you could to collect as many Bitcoin as possible? I would. Well, that's this time right now for us. So what does it take to be a node operator? People ask me, well, what do I have to do? Do I have to be a technologically savvy? Is it going to require a lot of time and effort? Here's what you need to understand. Your node is validating transactions. It's maintaining security. It's storing and ensuring the integrity of the blockchain data. Your responsibility is twofold. You have to keep it active. That's your responsibility. How do you do that? Well, if you have a server, you can host it yourself, or you can pay a third-party servicing company, a data center company, and they'll charge you $1.95 a month to host your node, and it is simple to do. And as long as you pay your $24 a year per node, your node stays active. You will earn Trusted Smart Chain token every day for the next 120 years. The second responsibility is to ensure that you show up to at least one node update call a month. The first Monday of every month, we do a big node update call for our community. We send out emails on an almost daily basis to keep our community informed. We also hold 5 Zooms a week. You don't have to get on all of them, but they're available to our community so that they can develop their education and be informed of what's happening on the Trusted Smart Chain so that when a vote comes up, they're in a position to be able to do so. Now, when you buy a node, you get an annual membership in the Trusted Society. Many have said just the education that they've received from the community exceeds the value of the node that itself. So what is Trusted Society? You get access to all of our social communities, all of our events. You get access to our affiliate program if you want to participate. You get access to one of the most esteemed blockchain communities in the world. This is what most projects are missing. We are building an army of node operators that function as stakeholders. As they go from belief to conviction, they go out and tell the world. And what that does is it continues to reinforce decentralization, continue to build trust, and allow us to continue to bring more real-world assets onto the Trusted Smart Chain. Now, what does it take to become a node operator? A current price right now of a node, if you bought one node, you come in to Trusted Society as a founder for $3,200. I say right now because every 1,000 nodes that sell, price goes up. Why? Because every day the supply is diminishing. There's only 200,000 nodes. When they're gone, they're gone. So every 1,000 nodes, we have a $100 price increase. It's very realistic. You could come back in 3 months from now, 6 months from now, and the price will be $5,000, $6,000, $7,000 per node. Why? Because it's all about supply and demand. Now, our next level in Trusted, by the way, one node gets you your software and activation, your daily digital rewards. You become a stakeholder in the DAO with voting rights. You get access to all of our communities. Now, one of the most common ways that people tend to get started is at our prestige level. It's 5 nodes. Why would somebody buy 5 nodes? Because they get 5 times the distribution. Currently, today, right now, a node is distributing about 0.20 token per day. Will that change? Yes. Is that a guarantee? No. Why will it change? Because as more node operators come online, the same amount of 7,191 tokens is distributed. So if there's more people online, the amount goes down. That's why timing matters. So 5 nodes currently today would mean that you would be earning about 1 token per day. You can go over to our Blockchain Explorer. You can see what the price is. Now, we have other levels. Legacy level is 20 nodes, 20 times the distribution. And then our elite levels. We have Luminary at 50 nodes, and we have Titan at 100 nodes. Our Luminaries and Titans, and we have hundreds of them now, they get special access to networking events, at our events that we host. They get invited to special breakfasts, special dinners. They're accumulating a lot more overall token. And we have quite a few people that are coming in right now. And towards the end of the year, money's moving around. People are looking for tax strategies and those type of things. I'm not a tax consultant. I don't give tax advice. I will tell you that you may want to look into Section 179 because there are people that are utilizing Section 179 as a tax deduction. Definitely go consult with your tax advisor to be able to get the advice that you need to make the right decision for you. We have one more level at Icon. Icon is 1,000 nodes. It's the most that we will sell someone. And the reason for that is because we want to maintain decentralization. Now, an Icon has to be voted in by the TSC Blockchain Senate because they will participate in the Government Relations Board of Trusted Society. They're going to own and earn a lot of token. In fact, I was doing some math on this today, and the amount of token that somebody earns is absolutely staggering at this level on a daily basis. So it's very important that we bring the right people into the overall Senate. I'm going to close with this thought. I live in an area in Arizona that used to be mostly farmland, and I have watched as these farmers sold the land off to the developers, and the farmers got wealthy doing it, and the early developers brought the roads, the sewers, the infrastructure in, they subdivided the land, and they made fortunes doing it. And then they sold the lands to the builders, and the builders came along, and they went horizontal, and they started building homes, and guess what? They made tens of millions of dollars. And then the commercial developers came and said, well, now they need grocery stores, gas stations, and food. And so they built their commercial developments and they made a fortune. There's a lesson here that I've learned, and that is this. Smart money invests in the roads before the rush. They invest in the infrastructure. If you think of back in the gold rush days, it was the people that built the railways and the people that sold the shovels that made the money. Well, right now, the rush is the $16 trillion in real world assets that was finally given validation and a green light by the US government to be able to tokenize. And they're all looking for what? A blockchain that can provide a regulatory and compliant pathway forward. We are holding the torch and we are paving the way. The road is made up of our node operators. More specifically, those node operators are earning Trusted Smart Chain token every single day for their support and participation. And here's the beautiful thing. Those tokens that they're earning, they're in greater demand with every real world asset that comes onto the Trusted Smart Chain. I missed Bitcoin in 2010. I had a friend introduce me to it and I told him that it was a scam because I didn't understand it. I will tell you this. I missed Bitcoin, but this is my Bitcoin moment. And I could not be more excited and proud to be a node operator here at Trusted Smart Chain. I mentioned to you early, nobody owns Trusted Smart Chain, and none of the developers or owners or any other strategic partners received any token whatsoever to launch this company. We operate nodes just like everyone else. We earn our token just like everyone else. Why is that important? Because there's nobody here to do a rug pull. Guys, I'm very proud that we just received the Blockchain of the Year award by the Internet Marketing Association in Washington, attended by all kinds of congressmen and senators, and even the Speaker of the House, because of the impact that we've had in the blockchain community this year. I invite you to get back to the person that shared this presentation with you. They'll be able to answer your questions and help you to get the information that you need to make sure that so that you can decide whether or not you want to become a node operator here at Trusted Smart Chain. Thank you guys very much for attending tonight. Thank you for watching, and we'll look forward to our next presentation on Tuesday night. Take care and God bless.